Everyone is talking about the next crisis, not if it happens. When? You hear it in financial headlines. You hear it in investment circles. You hear it in quiet conversations between people who feel something is off. The debt is too high. The markets have climbed too far. Interest rates have stayed restrictive for too long. Banks look fragile. Geopolitical tensions are rising. The system feels stretched. And when a system feels stretched, people expect it to snap. History reinforces that belief. Empires rise, empires expand, empires overextend, and eventually they fall, so the assumption feels rational. The next crisis will finally break America. This time, the debt burden is historic. This time, rivals are stronger. This time, the global order is shifting. This time, the dollar's dominance is questioned. It sounds convincing, because crises are supposed to expose weakness. They crush overconfidence. They dismantle excess. They reveal structural cracks. They are moments of reckoning. But here is the uncomfortable question almost no one pauses to consider. What if the next crisis doesn't break America? What if it strengthens it? Not because the damage is minor, not because policymakers are perfect, but because the global system reacts in a very specific way when fear spreads. Think about how panic actually behaves. When markets collapse, capital does not disappear. It moves. When uncertainty rises, money does not stay exposed. It seeks shelter. When confidence fades, investors do not scatter randomly. They converge toward what feels safest. And repeatedly, across modern history, that movement has followed a pattern. After global financial shocks, after sovereign debt scares, after pandemics, after geopolitical escalations, each time volatility surged worldwide, something counterintuitive happened. Power did not fragment. It consolidated. So before we assume the next crisis will finally end American dominance, we need to ask a harder question. Are we evaluating the crisis itself? Or are we ignoring how the system absorbs it? Because the next crisis may not test America the way most people expect. It may test the resilience of everyone connected to it. And if that pattern holds again, then the next collapse could quietly reshape global power in a direction few are prepared for. Let's examine what actually happens when the world panics. Not the headlines, not the forecasts, but the mechanism underneath it all. Let's step away from predictions. Forget forecasts. Forget timelines. Instead, look at what actually happens after the shock hits, not during the panic. After, when markets freeze, when volatility spikes, when headlines scream collapse. What moves first? Global capital. Fear does not eliminate money. It redirects it. During the global financial collapse, investors didn't scatter into dozens of new power centers. They rushed into one currency, one bond market, one system. When sovereign debt fears shook Europe, capital concentrated. When a pandemic shut down the world economy, liquidity didn't vanish. It flowed toward depth, scale, and institutional trust. Each time the world faced systemic stress, the same pattern repeated. Risk assets sold off everywhere. Emerging markets struggled. Currencies weakened. But the deepest pools of capital did not shrink. They expanded. And here is the paradox. The epicenter of global finance often appears fragile before crisis. Excess leverage, overheated markets, speculation. Yet when panic spreads globally, that same center becomes the anchor. Why? Because in extreme uncertainty, investors don't ask, where is growth highest? They ask, where is survival most certain? Liquidity becomes king, scale becomes protection, and not all economies are equal in that hierarchy. Some depend on global confidence, others define it. Let's make this simple. Imagine a storm hitting the global economy. Stock markets fall everywhere. Currencies swing wildly. Investors rush to sell. Governments start to worry. Now ask yourself, if you were holding billions of dollars and the world suddenly felt unstable, where would you move your money? Not where growth is exciting, not where headlines sound optimistic. You would move it where you believe your money will still be there tomorrow. That's the difference between normal times and crisis times. In normal times, money chases opportunity. In crisis times, money chases safety. And here's where structure matters. Let's take a very real example. Many countries borrow in dollars. Their companies issue debt in dollars. Their governments hold reserves in dollars. Global trade, oil, commodities, contracts, is priced in dollars. So when a crisis hits and their own currency weakens, what happens? They suddenly need more dollars, not less. If their currency falls, their debt becomes more expensive to repay. So they scramble. They raise interest rates to protect their currency. They tighten policy. They slow their own economies just to survive. At the same time, global investors are selling risky assets everywhere. Emerging markets get hit. Smaller economies feel pressure. Capital flows out of places that feel uncertain. And where does it go? Into the deepest, most liquid bond market in the world, into the currency that global trade still relies on, into the system large enough to absorb trillions without collapsing. This is where many people misunderstand size. They think being the largest means being the most exposed. But in finance, being the largest often means being the strongest absorber. It means having gravity. When panic spreads, capital doesn't scatter equally. It flows toward the center. And that center doesn't just sit there. It has tools. It can inject liquidity. It can coordinate with other central banks. It can open emergency lending channels. So while smaller economies are defending themselves, the core of the system is stabilizing itself. This doesn't mean there is no pain. There is. Companies fail. Jobs are lost. Markets swing violently. But structurally, something else is happening. The world becomes more dependent on the system it ran to for safety. After the crisis, global investors hold more of its debt, more of its currency, more of its assets. So here's the uncomfortable thought. What if crises don't just test the largest system? What if they reinforce it? If you were designing a global financial architecture, would you prefer to be on the outside during panic, or at the center where everyone runs? Because when fear spreads worldwide, power doesn't disappear. It moves, and it usually moves in one direction. The real question is whether the next crisis will change that pattern or strengthen it. Now let's bring this back to the next crisis. Not a crisis from the past, the next one. The one people believe will finally break the system. Imagine it begins. Markets fall sharply. Tech stocks drop. Banks face stress. Unemployment rises. Headlines scream recession. Confidence fades. Globally, fear spreads fast. Investors in smaller economies start pulling money out. Currencies weaken. Governments panic. And once again, capital moves. Some money goes to cash. Some money goes to government bonds. Some money looks for the safest balance sheet it can find. Now pause. If global investors sell assets everywhere at once, where can they realistically park trillions of dollars? Not in small markets, not in fragile banking systems, not in countries that depend on external funding. They need depth. They need scale. They need a financial system big enough to absorb massive inflows without breaking. So even in a crisis that begins in the United States, global capital can still flow toward U.S. treasuries, toward the dollar, toward the system that still anchors global finance. That's the uncomfortable paradox. A crisis can start at the center, but fear can still pull money back to that same center. Meanwhile, what are other countries forced to do? They may have to raise rates to protect their currencies. They may have to cut spending. They may have to tighten policy at the worst possible time. The center, however, has options. It can inject liquidity. It can lower rates when conditions allow. It can expand its balance sheet. It can coordinate globally. So while the crisis creates short-term damage inside the United States, it may create even greater stress outside it. And when the storm passes, the result may not be a weaker core. It may be a world that is even more tied to that core. More dollar reserves, more U.S. debt held globally, more dependence on its financial infrastructure. That doesn't mean America is immune. It isn't. Markets can fall hard, people can lose jobs, political tensions can rise. But structurally, the question is different. Does the next crisis dismantle the architecture of global finance, or does it reinforce who sits at the center of it? Because if the pattern of the past repeats, then the next crisis might not be the end of American dominance. It might be another chapter in how that dominance adapts. And here's the question I want you to think about. When fear spreads worldwide, does power fragment, or does it flow toward whoever controls liquidity? If you believe the next crisis will permanently weaken the United States, ask yourself, where will the world run when panic hits? Because history suggests something very uncomfortable. In moments of extreme uncertainty, the world does not run away from the core, it runs toward it. And if that pattern holds one more time, the next crisis may not break America. It may strengthen its role in ways that are not obvious at first glance. So the real debate isn't whether a crisis is coming. The real debate is what it does to the balance of power after it arrives. And that is a very different conversation. Let's be clear, this is not an argument that crises are good. They are not. They destroy businesses. They wipe out savings. They create unemployment. They shake confidence. People suffer. But systemic outcomes and human outcomes are not always the same thing. That's the uncomfortable part. A crisis can hurt millions of individuals and still strengthen the structure at the center of the system. So the real question isn't whether the next crisis will cause damage. It will. The real question is who absorbs the damage and who absorbs the capital, because those are two very different things. Think about it. If global markets fall 30%, wealth is destroyed on paper, but money doesn't vanish into thin air. Assets are sold, assets are bought, positions are transferred, ownership changes hands. And when fear forces selling, those with liquidity gain optionality. They can buy when others must sell. They can stabilize when others must tighten. They can shape recovery rather than merely survive it. Now scale that idea up to the level of nations. If smaller economies are forced to defend their currencies, raise rates, or rely on external funding, while the center of the system can issue debt in its own currency, provide liquidity to the world, and act as lender of last resort, then crises don't level the playing field. They reveal who already has structural advantage. This doesn't mean dominance is permanent. No system lasts forever. History makes that very clear. But dominance rarely collapses simply because a crisis occurs. It usually collapses when an alternative structure replaces it. So ask yourself, in the next global crisis, what is the realistic alternative? Is there another financial system deep enough to absorb trillions overnight? Is there another currency trusted enough to settle global trade at scale? Is there another bond market liquid enough to anchor global capital? If the answer is no, or even not yet, then the next crisis may not redistribute power the way many expect. It may consolidate it. That's why the debate shouldn't be emotional. It should be structural, not will America suffer? Of course it will. But will the structure around America weaken or harden? Because if history is a guide, fear does not automatically dismantle the center. It tests it. And if the center survives the test, it often emerges with deeper global reliance. So when people say the next crisis will finally break American dominance, maybe the better question is this: what would actually have to change for that to happen? A new reserve currency? A new liquidity provider? A new financial architecture? Until something structurally replaces the current core, panic alone may not be enough. And that is where the real uncertainty lies, not in whether a crisis is coming, but in whether the world has built something strong enough to replace the system it fears. So here's the question I'll leave you with. When the next wave of panic hits, and it will eventually, will the world run away from the center or toward it? Let me know what you think, because the answer to that question may define the next era of global power.